Ouchie, ouchie, ouch, ouch. The new bond range was confirmed this morning. MBS were down 62 basis points right out the gate. Stocks lost 47 points or 46 points very early. Bonds came into the session with slightly weaker territory, but yields were screaming higher after a round of strong labor data. The ADP headline was palpable considering it attempts to operate on the same scale as the mighty NFP, which comes tomorrow. But the Challenger data is perhaps just as troubling for rates. 40,000 is the lowest reading in 8 months and is not remotely in line with the ongoing labor market softening the Fed said would coincide with only two more rate hikes. ADP number came in at 497,000 on a 228,000 forecast. That's huge. Challenger job cuts came in at 40,000 on an 80,000 estimate. Jobless claims came in at 248,000 on a 245,000 forecast. So that was a little bit higher, but not nearly as important as the ADP stuff. Consumer-facing service industries had a strong June, aligning to push job creation higher than expected, but wage growth continues to ebb in these same industries, and hiring likely is cresting after a late cycle surge. As usual, leisure and hospitality was the biggest contributor to job growth, adding 232,000 jobs, while construction added 90,000. White-collar and manufacturing jobs fell. Wage growth fell to 6.4% from 6.6% for job stayers and fell to 11.2% for job changers. Job changers received the lowest annual increase since October of 2021. Although I did go to Vegas over the weekend, and when you look at the lines of people standing in line to pay $20 for a drink, it's hard to imagine things are tough out there. We also got the ISM numbers. So ISM Services came in on 53.9 on a 51 forecast, beating there. ISM Activity Index came in at 59.2 versus 51.9 forecast. Pretty big beat there. Prices came in a little bit lower. Employment was up higher than forecast, and job openings came in at 9.8 million on a 9.93 forecast, and it was 10.1 previously. The July Fed futures are close to a lock at another 25 basis point hike at the July meeting in 3 weeks. Yesterday's recap suggested that bonds were bracing for impact from incoming economic data. It turns out that much more bracing would have been needed in order to avoid a big sell-off. Even then, it would be hard to brace for an ADP beat as big as the one we saw with a big jobs report coming up tomorrow and non-farm payroll forecast in the same territory. Bonds are right back at bracing mode today. The surrounding data wasn't quite as extreme, but none of it helped push back in a friendly direction. The 10-year yields quickly crested to 4%, and the MBS lost over a half point, which is nearly a full point. It was nearly a full point at the worst levels of the day. Like I said, MBS closed down 45 basis points, which is actually 47 basis points better than the worst point of the day. Stocks lost 35 points, so we couldn't even pick it up in our 401ks, and the 10-year was up 10 basis points. So ending the day with the MBS at 98.47, it puts us way down here in this really low range, which puts us also into a tough range where if this keeps holding down there, we're probably going to have to look at different coupons if it stays down in that range. We also got an interesting article I saw today that the United States pays interest on approximately $850 billion in debt held by the People's Republic of China. China, however, is currently in default on its sovereign debt held by American bondholders. Successive U.S. administrations have chosen to sidestep this fact, allowing business and trade with China to proceed normally. Now that the relationship with China has soured and the People's Republic of China has become the greatest adversarial threat to the U.S. and Western security, policymakers could revisit this appalling failure of justice, which would be interesting, where if they are held in actual default, that could make American bonds be a lot more attractive, which could help us out. We also got a post from our sponsor at thatmakesense.com. This is about balancing success and feeling content. So we sacrifice the thing we want for the thing we are supposed to get. For example, we sacrifice freedom for money in the hope that the money will give us freedom, or we break the law to get money, which is supposed to buy our freedom, but then they take it away. So it's all about balancing that stuff out and finding your success. So check it out at thatmakesense.com.